Dude, I was chilling at a pool on the East Coast last week, and I just like, I need to raise some money right now. So I did a little post. I was chilling at the pool, and I said, if you got money, hit me up for cash flow deals out of state. This guy ended up reaching out to me in the DMs. He's like, yo, I've been following you for a year. I met you at Ryan Pineda's event, July 2023. My wholesale business is pumping out cash, like 6 million this year. We hopped on a call with him. Yeah, he's interested in doing deals. And like, that's just one partner right there. And who knows where that goes, right? Like, he's got 6 million cash.
All right. Thank you so much, everybody, for joining us. I have a friend of mine here today, Chris J. Luna. Thank you so much for joining us. He's a real estate investor. He's a ADU developer, a property manager, and asset manager. How you doing today, man?
I'm doing well, man. Thanks for getting me in the studio today. I love the Riverside setup. I use it for some of my virtual podcasts. And yeah, man, I'm just thankful to be here. Super excited to bring value to the audience. And yeah, ready to go.
Yeah, thank you so much. Looking back, I think that's actually how we connected. We connected on social media. I think you had mentioned I like commented on multifamily investors post, and then you reach out to me, and then I was on your podcast.
Yeah.
And that's how I got to be using Riverside, because I remember we were on that program, and I was like, that's a good program. Yeah. So that's how I started on it.
It's just crazy how social media, you're just one comment, one like, one DM away from kind of the trajectory of your life changing a little bit. Like, all of a sudden you could be on a podcast with someone. You could be using Riverside all of a sudden. So that's the power of social media. And that's why I love it is you get to connect. Like, how else would have you and I connected in the 1970s? Worlds apart, East Coast, West Coast. It wouldn't have happened, but social media, we made the connection.
No, that's right. And that's super powerful. And we'll get into that too, because I know you've done obviously a very good job with that. But for the people who don't know you, give us a little background on yourself and kind of what you do.
Yeah. As the shirt says that I got from Ryan Pineda yesterday, I'm a real estate investor here in San Diego. I started with nothing. I just had a cell phone repair business. I was hustling, making money, but I was blowing my money, and I wasn't making money while I slept. I knew that there was a problem there because I wanted to be able to make money 24/7. And so I would fix cell phone repairs. I would fix cell phones, and I was doing well with that. But I knew that if I stopped working, I had no money coming in. So I was like, okay, I got to get into this real estate thing. Started following Grant Cardone. He's hanging out on his jet. I'm like, okay, that looks kind of cool. How do I get what that guy has? Start reading all of his content, learning the game, watching his YouTube videos. Every Monday, I would not miss his live streams. I learned so much from that. And it really inspired me to get into the game. I happened to have buddies who were buying real estate by San Diego State, my alma mater. At that time, I just followed their lead. I managed their properties. I believe it was like 20 at the time. I really learned the property management game and the asset management, which I didn't know would later turn into like increasing the value of these properties. I didn't get that back then. We could dive into that later. But I started following their lead, managing their properties, start buying my own in 2016. So I've been in the game for about 8 years. Portfolio has grown over time. I haven't done any syndications. It's all been private funds or partnering with friends and family, 1031 exchanges to bigger and better. We went from residential to ADUs to multifamily development. And now I'm sitting on a portfolio here in San Diego, and I'm going to continue to grow that.
Yeah. That's awesome. Yeah. That's so cool. Yeah, that was something I was going to ask you to break down which you just went ahead into. What does your portfolio look like today?
Yeah. At the peak, I will say it was worth $40 million. That was 2022 before interest rates start rising, and I just saw values going down and down. Right now we manage about 50 units. A portion of those are mine. Most of it's by San Diego State. So we would buy these single family homes, build ADUs on them. These things are pumping out 10 to 12,000 per month in rent. And I have quite a few of those throughout San Diego State. My other properties are located in Pacific Beach. I have a 8 unit that we're adding 6 ADUs to. I have a 3 unit we're adding 6 ADUs to. A 5 unit we're converting a garage, which is a junior ADU here. I had a 7 unit by the beach, but these are big deals. I mean, it's different compared to, I'm looking out in Cincinnati, it's $95,000 a door. Out here, I'm paying $480,000 a door, but it's 3 blocks from the beach. So much different game. I can't really say I have a bunch of doors and people are going to be, oh, wow. But what I will say is I closed $10 million of Pacific Beach apartment deals in the span of 45 days. So I've done some damage here in town. And what's cool about that, as you guys know, as brokers, when you close deals like that, people feed you more.
Mm-hmm.
My problem now is
Mhm.
that I see too many deals and I don't have the ability to say no. So, yeah,
That's a good
yeah,
problem
it's a
to
good
have.
problem to have. I just got to have a little more discipline to say no to some deals.
So how'd you make the jump from going to, buying the single families to the apartment buildings?
When we were entering into the game, it was based on residential is based on comps, right? So what did Sally sell for next door? I was paying 650, 700. People thought I was crazy. They're like, you're overpaying, paying 700. Looking back on it, now these things are trading for $1 million on entrance. That's
Wow.
before adding the ADU. That's just a single family home. So we'd buy the single family home, 700,000. We'd plop an ADU in the back. That cost us 200K. We're all in it for 900. Now, what we didn't realize was because we were buying single family homes on comps and then turning it into a rental, putting students in these rentals by San Diego State, we were able to exit on a 5 cap, 4.8 cap, 5.2 cap, which gives it this kind of multiplier effect on the value. So we were exiting at 1.4, 1.5, 1.6, 1.7. And then you could see the spread on that. We're walking 600, 700, 800K plus our original equity back. And so now we're walking with these big chunks of change, and I didn't know what to do with the money. But I always knew, because I started off studying Grant Cardone's stuff, that number of units, the most important thing. So I'm thinking, okay, I got to get into multifamily. I realized I can't buy 32 units in San Diego. That's that's a lot of money. 15 million, 16 million. That's just a big jump for me. So we started looking at 5 to 6 to 7 to 8 units. When I sold off some properties by San Diego State, we had some money, and we, tax 1031 tax free or tax deferred 1031 exchanged it into these multifamily deals. There was a problem. I remember my first deal, 1009 Hornblende. I went to Clark. He was at Cushman and Wakefield, I think, at the time. And he's like, man, like, your portfolio looks great. It's all single family, and the seller's a little worried. Like, they don't know if you can close. And in my mind, I'm thinking, like, yeah, he's probably right. $2.4 million purchase. I had never bought anything north of $1 million. This is a big jump for me to go from 600, 700, 800K purchases to 2.4 million. I still don't know how I pulled it off, but I think it's because Clark was the glue between the buyer and the seller. It's not like residential where you have an agent on both sides. He was the glue that held it together, and he just walked me through the process. We were very transparent with the lender getting the debt done, and the equity was there. So that was good. And it was really the broker, I believe, that held that transaction together. He really believed in me, and he helped me get my first multifamily deal done in 2022.
That's awesome. So basically, you were going from these single families to selling them, like you said, on a cap rate. So when you were selling them to these buyers, were they getting commercial lending? I mean, if it was 4+ units?
I don't recall. What I do know is they were willing to pay some crazy prices. I don't. Most of them were one unit plus ADU or duplexes. I know they were getting great financing, and they were getting low interest rates, and that I remember them coming in with a lot of money, like 30, 35% down. So these guys weren't like highly leveraged, and I think they were looking at it from a cash flow perspective where they're making a nice little return on a turnkey asset. For me, I was like, I don't want to own student rentals anymore. I was in the management game for a while back there, like me personally, and I was just tired of managing the tenants. So I was like, I'm gonna sell off some of these.
Yeah, that you got my interest peaked. So like you said, they bring in like 10 to 12,000. Is that as a student rental, like renting by the bed, or is that like what it something would actually rent for?
Yeah, so each bedroom would lease for anywhere from 1,200 to 1,300. That's back when I was selling. This most recent season by San Diego State, we're getting 1,500 a bedroom.
Wow.
One of my properties is gonna have 6 ADUs, 25 beds total across like a bigger lot. And then that thing's projected to get like 35 to 37,000 per month in rental
So
income.
you think that it's because more so like that
That's
it's student
insane.
housing that's why you're able to get more, because you're able to charge per bedroom?
Yeah, exactly. San Diego State has the Highway
Okay.
8 above it, so we got barriers to entry. You have like a lot of single family homes below it on a
Mhm.
U shape, and there's nowhere to live. So these students, they live in the dorms. They're happy year 1 and year 2, they're forced to live in the dorms, but by year 3, they're like, "Get me out of here. I'm trying to live in a single family home so I can have parties," or like, sorority girls want to live with their friends in a home, and it works very well. And I knew that because I went to
Mhm.
San Diego State and I said, "Okay, this is perfect."
Yeah, that's
Yeah.
awesome. So walk me through, because I'm curious. I've heard a lot on, I listen to Rich Summers' podcast a lot. I know you've had him on yours and been on his podcast, which is really cool. But we actually interviewed him a couple weeks
That's
ago.
awesome.
But
He's going to be on mine.
yeah,
He's going to be on mine soon in person, I think in
Oh,
July.
that's
But yeah, I've
great.
been on his.
Yeah.
that's
Yeah.
awesome. That's so cool. How does it work with the ADUs? Because didn't you say you can just build, I guess, like unlimited ADUs in California now?
Yeah.
Theoretically unlimited, but like as much as you could feasibly
Yeah,
fit.
exactly. San Diego specifically, and I think Long Beach I heard is next. San Diego is really pro development. Again, barriers to entry. You got the ocean, you got Camp Pendleton, mountains, Tijuana. Nowhere to live, rents go up, and we're trying to solve that problem. On certain properties that have the correct zoning, allow for a higher FAR. FAR is a floor area ratio. Think of it as like a multiplier effect on the lot size, and that's going to allow me to build whatever that number is. So if it's a 7,000 square foot lot times a 2.0 FAR, I can build up to 14,000 square feet minus the existing. If there's 2,000 existing on it square feet, 14,000 minus 2,000, I can build up to 12,000 square feet. And that is significant in San Diego. So identifying those properties is my bread and butter right now. And we use the bonus, they call it a bonus ADU program. Half of them do have to be deed restricted 15 years at 80% affordable market rate. I know that's going to confuse everybody. Basically, it means rent's going to be a little cheaper there for 15 years.
Yeah.
But we have a loophole where if you're building one beds or studios, it kind of looks close to what market rate would be. And so we build a lot of studios and one beds in great markets and great locations. Like I don't build in the hood. I build in like great locations.
Yeah. Oh, that's awesome. And are these like, how big are these things? 600 square feet?
Yeah, they
700
could be
square feet?
studios, 400 square feet on the low end. They could be smaller one beds, 525 square feet. They are smaller units for sure. On some of these deals I just told you about in PB, those are a lot of studios. Students don't mind the studios. They're great. They'll lease for 2,000 all day. On those properties I listed where I'm adding 6 ADUs times half are affordable, half for market, it's just going to be basically $2,000. So 2,000 times 6, I'm getting an extra 12,000 in rent, and my existing property already gets 10,000. So almost doubling the rent. And then you have the Airbnb play too, which can really bring this to probably, I don't know, some ridiculous numbers. If I don't do the long-term rental on the existing 3 units.
Yeah.
That's awesome. Yeah, we have me and Jesse have a duplex here in Durham, and we have the ability to build at ADU in the back, but the numbers just don't quite make sense yet because the price per foot to build is similar to what you could buy something for here. Still, I know it's not the case in San Diego, but the only way it would make any sense is if we did do Airbnb.
Yeah.
So it's interesting to hear how there's that difference, and you can build it for who knows $300 a foot. But then you guys are selling for such a higher price in California.
Yeah, that spread. Sometimes I can build $250 a foot and then exiting 600, 650 on a stabilized asset, brand new construction that exists. And so what I'm actually realizing through all this, because we launched like a coaching program. And in the coaching program, I found it hard to sell people on the idea of developing ADUs. It's not as easy as I thought it would be. And that's probably because kind of like the issue you guys are running into, like, yes, you can do this, but does it pencil out? Does it make sense in areas outside of San Diego? Often the answer seems to be no. And that's okay. So that's why I'm kind of shifting more so towards maybe teaching people how to be good property managers. That could be something that anybody can do in their backyard across America, is get into property management, which is like the gateway to getting deals, is what I've seen.
And correct me if I'm wrong, but it sounds like you guys can build a whole lot more than we can. I think we can only build so high, obviously, but with SCAD and everything, we could still only build, I think it's like 12 or 1,300 square foot. Am I right, Graham, on that with the numbers?
Yeah, 1,200 square feet. And SCAD is just an amendment that was passed here recently for people who are listening that makes it easier to do ADUs and split off smaller lots and stuff like that. Kind of like what you said, kind of solve the lack in housing.
Yeah, California has the same thing. It's 1,200 square feet by right. That can be on any parcel across California. But San Diego took it a step further, and that's what allows us to build multiple units where I can build 5, 6, 10. Well, one of my properties, I got a feasibility study. The feasibility study basically shows you what you can build on something by right. And I could do 20 ADUs, 5 stories. I'm not getting into that game yet. It's just concrete, much higher price
Mhm.
in construction. I like to stay about 2 to 3 stories. Construction is much cheaper, and I can have local guys do it. And again, no elevator, so you save $1 million right there alone.
Right. Yeah.
That's
Yep.
cool. So with all the stuff that you're doing, something I like to ask is, are you doing all this stuff by yourself, or are you operating in a team?
Yeah. So I have what I've identified through education is I thought education was going to be this big, huge company. It's not, for me at least right now. But what it's helped me do is identify people who are super serious, and I try and find. We sit on Zoom calls in which we're teaching them, but then I see like, oh, this guy's got a talent for raising money. This guy's got a talent for understanding deal structures. So I've partnered with a lot of people in my community as partners, like joint ventures. So me and TJ and Josh, some of the guys I've started coaching early on, now they're helping me raise money, and we're starting a fund together or just syndications. And that's going to be for much bigger assets. We were going after 87 unit in Cincinnati. We got to the second round. Sellers said they want to sell the entire 5 property portfolio to one person. So instead of rolling with us, they have 8 other offers for the entire portfolio. We're just not quite there yet. We'll continue to raise money. So, I have that. I have the property management arm with Celia. We do that, a 60-40 split where she's taking some profit. I'm taking some. We're going to build that company. So a lot of it's just partnerships with people. It's I have no one in house, but I am thinking about hiring like an assistant and or someone to edit content for me 24/7, kind of like a split role where if they're not, they're following me around to events, capturing the content, editing it, posting it, and then also hiring an assistant because I hate booking flights. So yeah, that's kind of what I'm looking at these days. But I tend to do a lot of stuff by myself, and the coaching calls are kind of this. It's almost just a community meeting where I'm being very transparent about deals I'm doing, and people get to see that, whether that's the students or investors that I have on these deals, they come to join these education calls.
That's cool. Yeah, that was one of the questions I was going to ask. I was going to say, tell me a little bit about your online community and why you decided to start that.
At first, it was actually two reasons. Like, it's fulfilling to see other people do deals. I think it's great. I know how real estate changed my life, and I want that for other people. And then, to be honest, the other reason is active income. Like, as a real estate investor, where's my next paycheck coming from? If it's not from a 2.5% acquisition fee on a property, which are nice, by the way. I closed a $1.85 million deal in PB. I made 2.5% because I'm an agent and broker. That was like a $45,000 commission for very limited work. It wasn't rocket science. And then I also owned the deal. Problem is, I don't see that $45,000. I never saw it. It goes back into the deal as equity. And then, I came in with 300K. So maybe I had to come in with 260. But now I got my 300K in the deal. I'm stoked. I own 50% of the deal. But where does my active income come from? So then I realized, well, I got to start producing active income. And that's why I had the idea to start the education company. But what it's turned into is just me partnering with people, starting a brokerage. Maybe we're going to have a bunch of real estate agents under us where we're focused on 2 to 3 units, 2 to 4 units, these smaller multifamily deals anywhere in San Diego, and become the kind of, there's, when you think of like selling Sunset, there's the high end people selling, the nice La Jolla homes, $4 or $5 million. But I want to be known as almost the ADU brokerage where we're looking for, or the development brokerage where we're looking for 2 to 3 units with a lot of backyard space. And we could either sell that for the owner or we could buy it from them direct.
That's awesome. Yeah, that's really cool. And with the personal brand that you've built, I think, like I said, we got connected through social media. So when we were, I think back then you had like 2,000 or 3,000 followers, but now you've got quite a bit more. I mean, what made you decide to go heavy on a personal brand? And then also, how much has it affected your business so far with all the different ventures, with real estate investing and the community and everything like that?
Yeah. Well, how it actually started was, I was just telling this story on Ryan's podcast yesterday. It was it was July 2022. I did golf with Ryan. That's the first time I had ever paid for to be around an influencer and learn from someone who was playing the game at a higher level than me. And I was kind of like, dang, I just spent like X amount of dollars, whatever it was, $3,000. A couple months go by. I'm like, okay, I got to get into this social media thing. I was posting on TikTok. Ryan Pineda called me out. He was like, bro, you got to post on Instagram. Ain't no one following you on TikTok. So I was scared, fear of judgment, which most people will have to speak to a camera and put
Mhm.
themselves out there. That was the first hurdle I needed to handle. Started posting on TikTok because no one was looking there, and I perfected just speaking a little bit, enough to be able to post on Instagram and be like, okay, I can live with that post. Later, August 2022, Grant Cardone, they're like selling me hard on his real estate club. And I was like, well, this actually probably could help me. This guy's got billions of real estate. There's probably a reason and way he did that. I'm going to go join that. $25,000 at the time was a lot. I think I was like $5,000 payments for 6 months. I think I ended up paying 30,000 because I did the payment plan. But after that, it's August, maybe around, August 2022, they reach out to me, Grant Cardone's people, and they're like, hey, you want to be on his real estate cash flow king show? I'm like, absolutely. But I didn't know anything at the time. And I was like, well, what would I do? Well, you're going to hop on a Zoom call. It's going to be an audition. So I bought all this stuff you see behind me. I bought like this, like my microphone, my camera. And I was like, I got to look professional. I had like a polo on. I'm looking fresh. And I get the spot for the TV show. Grant comes in town. I pitched him a deal. I own already an 8-unit in Pacific Beach. Actually, my partner pitches him that deal. I pitched him a 65 unit in Claremont. I was trying to like go big. If like Grant's coming in town, I want to go big. So kind of had 2 deals in on it. That will be coming out on Netflix or Apple TV somewhere soon. But the reason I tell you guys all that is I was trying to, after that happened, I was like, okay, when this TV show comes out, I need to look super official. Like people are going to land on my page and they're going to see this kid who, like, if you scrolled on my profile back then, it was like me partying, traveling. Like I did not look like a real estate guy. And I was thinking, like, from Grant's perspective, he's going to see my profile. I do not look official. So I start thinking, okay, time to like clean up my profile, put out content, become known. And that's what I did. And what's funny is I thought that show would come out after 3, 4, 5 months. So I was in a rush. And now it's been 2 years. It's 2024. Still haven't seen the show. Still not out. But if you land on my profile and you see everything I did and the people I'm hanging out with and the podcast and the real estate, now I look official. So if there's anyone out there who's like worried to hit record, dude, just hit record, start recording, put yourself out there. A lot can change in 2 years.
Yeah,
that's awesome because that's kind of like
go ahead,
what
Jesse.
got us started with this podcast. Like, Commercial Academy has this thing like, don't be a secret agent. We're trying to get to that point with using the podcast to like show like, hey, this is what we're doing. This is our goals. Learn with us. We're trying to learn from people like you through this podcast. We're going to put this out there so people in our brokerage or whoever else, that's wants to tune in or follow us on Instagram can learn with us, and they can add value too. You never know what can happen through social media.
Yeah, and to answer Graham's second part of the question, like a lot has come from it, like raising capital. So I was chilling at a pool on the East Coast last week, and I just like, I need to raise some money right now. So I did a little post. I was chilling at the pool, and I said, if you got money, hit me up for cash flow deals out of state. This guy ended up reaching out to me in the DMs. He's like, yo, I've been following you for a year. I met you at Ryan Pineda's event, July 2023. My wholesale business is pumping out cash, like 6 million this year. We hopped on a call with him. Yeah, wow. He's interested in doing deals. And like, that's just one partner right there. Who knows where that goes, right? Like he's got 6 million cash. He's got the problem of he needs 100% or maybe 80% bonus depreciation. He's got a tax problem. He doesn't have
we may have some deals
problem.
for him, Graham.
And I can solve that for him. There you go. There you go. That's how it happens. Yeah. So, I mean, that happens to me often. And so, yeah.
That's awesome. That's really cool. And like you said too, I mean, have you gotten, it's helped you with raising capital, but has it helped you? You said you have too many deals to look at. Has there been a lot of deals from social media, or has most of your deals come from like people seeing you on the deed, Chris closed another deal in California?
Yeah. San Diego, I would say well known. So all the brokers know me and they just send me stuff. So I see a lot of good stuff in San Diego. For San Diego, I love the ADU development play, high appreciation. Maybe you can flip some stuff when rates come down or borrow against it. I'd prefer to just keep everything in San Diego. I regret selling anything I've ever owned, but sometimes I got to do it because I commit to bigger deals and I just have to sell stuff and trade up into it. It's part of the game. San Diego's high appreciation. Outside of California, I like cash flow, and that's why we start looking into these other markets. They do not know us there, but they're starting to get to know us because we simply reach out to them on Crexy or LoopNet. However we can get in front of them. Like I said, I walked the 187 unit portfolio deal in Cincinnati, CBRE. Like now they met me. Now they know me. They know I'm a real buyer. They've seen some deals I've closed. They invited me to the second round, so they know I'm a real buyer. And then right after I didn't get that deal, they sent me something the next day that was, 60 units. So now we're on their radar. We've been looking at some stuff in Dallas, and I think it's inevitable, like as my social media brand grows, that we start doing these kind of bigger syndications, 80-20 LPGP splits, typical multifamily deals. And that's how I'm able to scale my brand and appear bigger and also help more people and help them solve their problems.
That's cool. So the bulk of the deals are coming from brokerage outreach.
Yeah.
then.
Yeah. Brokerage outreach, out of state. If it's in state, then they send it to me. They just know me already.
That's cool.
So with the property
really cool.
management aspect, are you guys looking across the country, or are you guys just looking at like the San Diego area?
This is also fresh. Ryan Pineda had the idea yesterday because he was like, how do we play this angle? Like, yeah, you're a developer, you're multifamily ADU guy, but a lot of people do that. And we don't believe there's anyone leaning into property management. So this kind of hit me. I was like, well, I just got my broker's license. I'm already managing all my units. To answer your question, I think it's going to be predominantly San Diego at first because I'm here. I want to build infrastructure. And my students are going to build units. They're going to build 10 units. Who's going to manage it? Of course I am. I am looking into buying a property management company. I've been doing some outreach on that to just acquire a bigger company, get access to their investors, and just to kind of get the company rolling off the get-go as opposed to just mine. So that's something we're looking into, or identifying 2 to 3 big investors who have 100 units here in San Diego and just getting their entire portfolio. So that's one thing. As I get into the education of property management, or my team does, I think that potentially there's an opportunity to teach other property managers how to become a manager in different states. And from there, maybe there's some type of collaboration we can do to become this bigger management company across the US for mom and pop shops, not these big. Yeah,
That's cool.
not like.
Is that something you're going to partner with Ryan on, or is that something you're doing yourself?
Yeah, I think that's something we could partner together because he has the reach. I think it's more so about building the infrastructure here in San Diego, proving I can do that. And then once I have something together, using his reach to go and find people across the US who want, it's just, there's no, like, to get into management sounds a lot easier than like, hey, buy your first multifamily deal, or hey, develop an ADU. So we think that there could be a bigger target demographic for that. And if we structure it right, yeah, that could be something we do together.
That's awesome. Were there, one of the questions I was going to ask was about your podcast and kind of like why you decided to start that. But you went on to Ryan Pineda's podcast yesterday. Was it yesterday?
Yeah,
right?
Yesterday.
Yeah, and he's obviously got a massive audience. So did you have any, big takeaways from that?
The way he ran the interview, I love that. This is something I learned because I have my own podcast. But like right from the get-go, he was like, what's the angle here? Like, because he started asking me these questions. And actually for the first like couple minutes, I was nervous because I felt like he was interrogating me, but it was a good way because he was trying to get to like, what is the angle? What are we trying to, that's how we came up with this management thing, which just makes total sense because that's the game I'm in. And I think maybe there's a stigma about being a property manager, right? But as you guys know, NOI determines the value of the property. So the property manager is super valuable to the investors and the profitability of the investment. But a big takeaway, I guess, would be that when there was a lot, but I think to see that he's been so consistent with his podcasts and everything he's done, that success is inevitable if you just stay down the path. Because I get down some days. I'm like, man, why am I doing all this? I keep showing up to these things. Like, what is this really happening? Like, is this helping me? But the truth is, it is. Even if you're just getting one new person on one new podcast to follow you and support you, one new connection, I think that's how you spiral, and all of a sudden people know you across the U.S. So sometimes it could be kind of disheartening when you're not seeing growth, but if you just stay the path, like things start to happen. I'm gonna say one more thing. It was very surreal. Like when I'm sitting there in the podcast room and I know Grant Cardone sat in that chair, like all the big dogs, Ed Milet, like I'm thinking to myself, like, whoa, this is kind of crazy. Like I had prayed and wanted this for, I think 18 months. I was like, I'm going to sit in that chair someday. And then to be sitting there, it was crazy. But you know what? All the podcasts I had done prior, all the interviews I had done prior led up to that moment, that after like a few minutes and once we hit record, like went by, I was like, this was easy. Brandon was like, bro, you crushed it. That was insane. And so I think all the reps and all the practice was like leading to that moment. And now, like, I have sites for my next podcast. Like, what's that going to be? Like, am I going to be on Grant Cardone someday? And so, am I going to be on Brad Lee's? It shows me what's possible now that I had actually got there and I was sitting in the seat.
Yeah, that's encouraging.
That's awesome. Yeah, and I think consistency is huge, and everybody who's, you look at anybody successful, if they do anything consistently for a long period of time, it's, like you said, inevitable.
Yeah, it's inevitable. I'm going to be on Rich's next, Bridger Pennington. I'm going to reach out to Ryan Secco. I was supposed to have him on mine, but I got sick when he was in town. So I'm trying to aim for these bigger players now who have bigger audiences, because I just know that's how I'm going to reach more people, is getting bigger people with bigger audiences. But that doesn't mean, like, I didn't skip the steps of having like my friends and local people on first, because that's where you develop the skills you need so that when it is time to shine, you're ready to go. Bridger Pennington, 18 months ago, I'm at WealthCon. I walk up to him in the elevator. You guys know him from Fun Launch Live?
Yeah. I've seen him, yeah.
I asked him, I'm like, yo, will you be on my podcast? This is before I even had a podcast. I didn't have a title for it. And he goes, yeah, man, absolutely. I'll be on it, but not until you get 20 episodes. So that's how this whole thing started. Is I was like, wow, I can have a big dog on the podcast, but 20 episodes. He knew that most people won't get to 20 episodes. They'll quit at 6. I think to be one in the 1% podcast, you have to like post 20 times or something, Rich says. So yeah, man.
Yeah, that's funny. Do you know Brian Lubin?
Sounds familiar. Yeah.
He was on Rich Summers' podcast. I think he's been on podcasts with Brandon Turner. He talks about podcasting, like online communities and stuff. But I reached out to him and was like, hey, we just did a podcast with Rich Summers. Would you be on my podcast? He was like, absolutely, once you get to 50.
Yeah.
And I was like, all right, we'll get to 50. Go. We've got, I've got 5 recorded. We haven't dropped any of these yet, but I've got 5 recorded. And then we've got,
this will be
me
3.
and Jesse have 3 together now? This is 3. Yeah. So that's 8.
Let's go.
So
that's amazing, man.
And then once we hit 10, we're going to start dropping them. And that way we have a, good cushion.
That's good, man. Stick with it. Don't quit. Keep going. And it's inevitable. You'll have success.
Yeah. So what made you start yours? Like, what was the motivation behind it? Was it because of that one conversation, or was there more to it?
Yeah, it was that one conversation. I obviously really admired Grant and Ryan and what they had done. And I said, well, they have podcasts. Why do I not have one? What's cool is it makes you a better public speaker, makes you a better communicator, all the things. There's just so much upside from like getting those reps in and talking to people. Like talking to you guys makes me a better educator when I'm talking to my students. It makes me better when I'm raising money. It makes me a better public speaker. So there's just a lot of upside from doing those reps, not just so that everyone else can see it and they get value. You become a better just speaker, and that helps with a lot of different things, whether that's getting deals or securing debt from a lender.
Okay. Something I wanted to ask was, getting started, and, I'm honestly not sure what your repetition is on podcasts, but like we just said, we're going to do one a week, and then we're going to be consistent. We're going to, we're going to take, I guess, Think Media's strategy a little bit with posting a couple clips a week, a couple shorts. What's kind of your recommendation for what we do?
As far as like a post schedule?
Like a schedule, and then like something that we can be consistent on.
So this is what I did. I made the commitment online. I told everyone I was going to do it. So that adds social pressure and accountability. I told everybody, I think it was February 12th, 2023, I'm going to post once a day for a whole year. That's where I saw all the growth. And I didn't hit it. I think I posted like 77% of the time. So like almost 300 posts, but I'm not mad that I didn't hit my goal. I never quit on it. On days where I try to catch up, I post 2 if I missed a day, and it added up. So my what I would say to you is make a commitment to posting X amount of times in 90 days or 120 days. And I would actually like stick to that, and you'll see the growth. And you'll go out or you'll head places, and people will say, dang man, I keep seeing your content. It really gets the algorithm going when you can stay consistent. So I would say post like 120 times in 120 days or something like that. Very strict schedule. Doesn't have to be for a whole year, and you'll see the results after 60, 90 days.
Yeah, that actually leads perfectly into the next question I had, and it might be the answer to the question. But if you were to start over, like 0 following, 0 audience, what would you do to build a personal brand? And I guess what platforms would you pick too? Would you go across all of them? Or?
Yeah. So I asked Ryan a very similar question. I was like, what should I do? to really continue to grow. And he gave me 3 things, and I would have done this differently. So when I started off, I focused on my own stage. On the Come Up podcast, that is my stage. And it's a lot harder to get attention because it's a slow grind. And that's what you guys are doing right now. It's going to take a while, right? That's great. Continue to nourish that stage. It's a stage. This is a stage right now. The other stage is going on other people's stages, and they've already built the audience. Now, the bigger they are, it's harder to get on their stage, right? Because there's got to be some type of value exchange. Like to get on Ryan's podcast, like that took a while to build that relationship, 2 years, golfing with him, going to his events, supporting him, paying him to be part of his programs, traveling with him to Cancun. Like we've done a lot for me to get there, right? So that's his stage. The other way is, I forgot the last way, but going on physical stages. And I would just say, continue to nourish this stage, but also look to get on other people's stages, because that's going to just get your presence out there much faster. And then as your stage continues to grow and the audience grows, you can barter that with other people who have stages, and you kind of swap and trade. So yesterday when I went to Ryan's office, I was on his podcast, but he was also on mine. That is like amazing. That's why I was willing to fly out to Vegas, because that reach on that podcast alone, that puts me on the map across the US. That's what I needed to launch this thing.
That's awesome. No, that's great advice. That's something I hadn't really thought about, but getting in front of, my perspective was, let me get big people, big names onto my podcast. Like I've interviewed Rich Summers, Tyler Cobble, Bob Knackle, which are some of the pretty big names in commercial real estate. But like you said, this is our stage.
Yeah, absolutely.
So
think of like Rich Summers. I've seen him do these day trips or these week trips where he's going on he's flying to people. He'll go to Ryan's office, and then he'll fly to, I forget the guy's name, the guy with the private jets, kind of intense. Yes. Yeah. Yeah, exactly. Like he was on his podcast, and he's hopping around, right? He's going to these bigger players. And often you have to go to them. And I think that's totally cool, because it's like, it also shows your audience, like, dang, this fool flew out there to be on this podcast. That is like commitment. And that just makes you look official. So I would say, look into doing that. Maybe there's some podcasts you can be on. Someone I can connect you with that it's kind of close to you guys. I don't know how close Miami is, maybe a couple hour flight. Yeah. Do you know Gabe Bowling out in Miami or like Florida area?
I think it's like an hour and a half.
He's going to be launching a podcast. He'll have a studio. He's got a big multifamily group called The Deal Room. I think it's probably one of the better multifamily education companies. He worked for Grant Cardone for a few years. It would be a great podcast to either have him on yours or be on his. And I can make an introduction for you guys.
Would love to.
Yeah, that would be great. Our company is doing a sales competition, and the prize is to go down to Miami. We did it last year. So yeah, Miami's cool. Yeah. No, but that would be great. We appreciate that.
Yeah, of course. That's another way. It's just like asking for referrals from other people who've been on podcasts. That's a good way to get on others that I'm learning to use.
Okay, we appreciate it.
Awesome. Are you guys? Yeah. Are you guys still looking for deals in North Carolina? Because I remember at one point you guys were looking at multifamily deals in North Carolina.
I feel very confident. I just know for a fact, like eventually I'm going to start buying these multifamily deals, like 32 units and up. Out of state for cash flow, if it in fact is cash flowing, or have the opportunity to cash flow. It hasn't happened yet, but we are looking. So we're looking at some deals in Dallas right now, passed on the Cincinnati deals. And yeah, we would love to buy North Carolina. We have friends out there that can help us operate it. And I was just out there last year. So I like North Carolina, Raleigh, the Triangle, right?
Yep. That's where we're at.
We'll keep our eyes peeled for you.
Cool.
Sounds good. I love it.
Well, I think one of the last questions I had is, I know you're a fellow believer.
Yep.
How are you incorporating your faith into all these business ventures?
Dude, it's been a game changer, because I'll keep it real with you. Like when 2016 to maybe 2022, I had so many investors. It was very stressful, and their stresses became my stress. And I'm over here feeling like I'm doing a great job. I'm killing it. I'm making you guys millionaires. Like, you guys should be so thankful for Chris Luna. Like, that was my mindset. And instead they're just like always dogging me, mad at me. I did something wrong, forgot to pay insurance, blah, blah, blah. Right. The list goes on. And I would get offended by it because I would feel like they're attacking me when I'm doing all this work for them and they weren't grateful, right? That's how I like saw it all. And now, like, incorporating faith into business and having empathy and thinking to myself like, oh man, they're just probably having a bad day, and just being a little more lighthearted about all this and not so feeling like offended or attacked by my investors sometimes. So that's just allowed me to be a better businessman, better, boyfriend, better whatever, better son, better friend to all the people around me because I'm not so tense. I know that I have a higher purpose that God's called me to do. And I don't even think it's real estate. I think real estate is just like what I become known for, but I think I have a bigger purpose for the kingdom. And so for me, that's super exciting because I don't know what that is yet, but I get to just step into that and use real estate as a vehicle to show like, hey, look, like God's given me success in real estate, but look at all these other areas of my life. Like, and I think that's more so of like this new stage I'm coming into that's going to be more of influence and helping others that like they can do it too. So, yeah, that's kind of where I'm at with my faith and business.
That's awesome. Yeah. I appreciate all the content you put out when it's faith related because it's refreshing and you don't see a lot of it online within entrepreneurs. You just don't. I mean, Ryan Pineda is great about that too. He's got a whole separate thing now for it, which is awesome. But yeah, so I appreciate that. Keep that up for
Thank
sure.
you. I appreciate that. Yeah, that was hard for me to do at first. I don't know why. There was some type of block or the enemy was kind of wouldn't let me post that. I feel like it was, again, back to that 2022 version of Chris. That was the fear of judgment. Like, oh, are people going to unfollow me because of this? Well, I don't care. Like, unfollow me. This is what I believe. I was born and raised Catholic, kinder through 12th. A lot of people don't know that. Sang in the choir. So, I've always had my faith, but in college, I kind of veered off, partying, going out, external validation, girls, all the things. And it wasn't until like I dedicated like my life to the Lord that I just feel like this void in me is gone. Like I feel a lot more whole now.
That's awesome. That's the best.
Sure.
Yeah, working. That's kind of what me and Jesse's goal as well. Doing all this stuff, but most importantly, serving the Lord. It's the most important thing at the end of the day. So
I didn't know you guys are believers. So that's awesome. Love that.
Yeah, 100%.
Let's go.
Well, thank you so much, Chris. Jesse, did you have any other questions for him before we get off here?
I just wanted to say to the last part, the empathy stuff is something I hadn't really thought about. I've just finished reading Faith Driven Entrepreneur. I don't know if you've read it or not. It's a great book. But it talks a lot about being grateful, but, empathy for other people too, like, what they're going through, working with investors and stuff. It can be very stressful. The guys that we work with at City Plat, I see sometimes like, it was a stressful situation and, understanding like, there's a lot tied into it, money and everything like that. But that's something that's really cool I hadn't heard. Really, I was curious because I've been I'm doing a lot of research into AI lately. I was wondering if you had any experience with that and how you're using that to kind of help your social media or anything AI related.
There isn't any. Well, there is one tool. I don't know if you guys know. Do you know Opus Clip? Yeah.
Mm-hmm. Yep.
Yeah, that one's pretty good as far as chopping up content fairly fast with limited effort. That's been pretty good. I've used it a few times, but I know some editors use it. I'm trying to work with Brandon to step up my editing game. I'm going to start putting out more content that's more educational on the property management stuff. But yeah, Opus Clip is one that I know of. I'm not too hip to the game on other AI things. If you like, Buildium's a property management service company we use, but I'm moving to Appfolio here this week. And so I feel like there could be some AI features in that I don't know about yet, but I'm going to be looking into. But yeah, I don't have too much info on AI yet, but being up to speed in general, I think in business is super important, and AI can help you do that. So if there's tools out there, people should definitely be utilizing them.
There are for sure. I'm taking the Massimo AI course right now, and I'm learning a ton through it and applying it and trying to see like how things are going. I created my own version of ChatGPT last night, and I was like, just make me a social media post. And I was just curious, and then it was actually pretty solid based off the information I was given it. So it's pretty cool what you can do with AI.
Yeah. Massimo's one of the bigger commercial real estate brokerage coaching programs.
Oh, really?
Yeah. So he's actually local to the Triangle as well. He's in Cary, but he coached Bob Knackle. He coached a lot of the big broker names, and they're going very heavy into AI right now.
So they teach people how to create like a multifamily brokerage, or what's that like?
No, more like to actually be a broker, not to create your own brokerage, but like, what you should be doing as a broker,
Oh,
like
that's cool.
what you should say in your cold calls, what you should say in your
Yeah.
mailers, how many times you should be meeting people a week, like almost like a business
Yeah,
structure.
that's awesome. I got a question for you guys
Yeah.
real quick. Like obviously you guys do all the things, mailers, cold callers. I'm starting a brokerage here in San Diego. Obviously there's the property management arm, but there's like a brokerage arm that I was telling you guys about, 2 to 3 units with a lot of land, so we can build a lot of ADUs. Besides using my social media presence so I can just get deals sent to me that way, would you guys recommend any other way for like us to find deals or get listings? Like what's going to be the best way for me to kind of break into that space?
Mailers are honestly huge. Like people sleep on mailers because, it's just a lot of people are doing that anymore. I mean, and honestly, it's kind of like going back to what we talked about, with the podcasting or social media. It's like any of all these things work. It's just consistency. So like if you cold call consistently every week, whatever the number is, let's say 50 people, like, but for example, my goal is to actually talk to 10 people a week. So typically that takes like 50, 60 calls. Some people try to do more. Like for example, Bob Knackle is known to be like one of the best commercial brokers ever in New York. And he told me when I had him on the podcast, he cold calls, he wants to talk to 100 people a week. That's next level. To actually talk to 100 people and have a meaningful conversation takes a lot of time. So like that's his main goal. So if you cold call consistently, no matter what it be, I think Jesse does 100 a week. Gets some really solid traction. Sending out letters, even if it's just sending out 10 targeted mailers a week. People pick up mailers and especially you hand write them. It's like not the actual letter, but you hand address them and put a stamp on there and do not put a return address. People will open that and people will call you. Like I just listed a building in Greensboro, North Carolina, and it was from a mailer. Sent him a mailer. He called me, he called me 6 months later, by the way. People will put the mailer on their fridge and then they'll call you and say, hey, I still have your mailer. I want to sell my building.
Okay, cool. So I'll probably run a bunch of mailers to anybody who owns 2 to 4, 2 to 5. A lot of what I'm buying is 2 to 4 units because that's enough on a 7,000 square foot lot. A lot of lots are small in San Diego, and then it has enough room to build the 6 ADUs 3 stories high. So I'll probably create a list of that, send a bunch of mailers out consistently, and then just get the Backyard brand out there to all of San Diego, because now they'll know Backyard brand is not only education or property management, but also brokerage.
Yeah. And also, if you don't know Henry Eisenstein, I don't know if you know him or not, but he's got his own commercial real estate coaching program. But I had him on the podcast as well. And one of his main things is like the money's in the follow-up. So you can call somebody once, you can send somebody a letter once, but really it's like the 5th or 6th time you call them, or maybe like the 3rd or 4th time you mail them, that they actually will respond to you and or call you back or get any traction. But most people just call somebody one time, mail them one time, and then move on to the next. And really they're just going in circles, not really making any progress. But so whenever you do that stuff, just make sure you're hitting people repetition, over and over again.
That's what I like about social media, because it's just a little different. But man, if you could just hit people with a few posts on social media and then they want to sell with you or sell you their property, that would be so much easier, because this is like a digital postcard. Just post a little story like, hey, but cool, man. I appreciate the advice.
I got one of my first listings off social media. So, and that's after like a year and a half, but it works. So just doing all that stuff, simultaneously, you'll get business for sure.
I appreciate that.
Yeah,
absolutely. Cool. Well, this has been great. Thank you so much, Chris. We really appreciate it. Man.
No, thanks for having me on. I appreciate you guys showcasing me to your audience. I'm super excited to see where you take the podcast. Don't quit. Don't give up. Get to the 50 episodes. Get the big dogs on there. Next thing you know, you'll be interviewing Ryan Pineda.
Let's do it.
Yeah. And what's the best way for people to follow you?
It's Chris.
Where do you want them to go
Chris J, like the initial J .Luna. J is my middle name, James. So Chris J .Luna on Instagram, very active. You can just DM me there. That's the best way. And then whether you want to throw money in our fund, do education, learn the property management game, or just hang out, let me know. Just hit me on the Instagram.
Awesome.
Yeah. Awesome.
All right.
Well, thanks
Appreciate
again.
you guys.
See you, Chris.